Hi, everyone. Welcome to this week's episode of the Canadian Mortgage Guide. Brandon Love here with Tom Moffat and a very special guest, Erwin Szeto. Erwin is the host of the Truth About Real Estate Investing podcast, and he is going to do a deep dive into why Canadians should consider investing into the US. We're going to also touch on some other fun topics as well. So, Erwin, thanks for joining us.
Thanks for having me. I need to say something as well is that, it's not often that other real estate professionals have me on their platforms to promote what I'm talking about because I think many realtors, mortgage folks feel that US investing is a threat to their existing businesses. So I think the kudos to you too, that you're open-minded and you want to share the truth with your listeners.
Yeah, I appreciate that, Erwin. It is true. Like, sure, you might be putting this out there and getting more people open minded, which might take away business. But at the same time, if it's something that's inevitable and it's going to help people along the lines of building up their future and their plans, like why not put this out there? And we've always been open with that stuff. And yeah, that's why we want to have you on. I'm a big listener of your podcast. I've invested in the US as well. I have one property there, and I know your plans to build out your portfolio. So I figured why not have you on there on our podcast and really just dive deep on why Canadians should be considering it and really get your take on it. Gonna put you on the spot here. Matt, why don't you give us like a 2 minute snippet of why a Canadian should invest in the US?
So where to start? All new investors always ask them about like, what's your worst case scenario? Your worst case scenario, like I'm in Ontario, I've had two clients have their properties condemned by actions that their tenants caused. As in, like, the insurance replacement value of the home exceeds the damage that was caused. Hasn't had their landlord tenant board hearing yet. They haven't been getting rent for 8 months. Another client, they haven't been getting rent for 12 months. So worst case scenario, it's not favorable in Ontario specifically, and also it's just so unaffordable. Versus in the States, you have a non-paying tenant, they're out in 30, 60 days. Basically, all the laws and rules favor the landlord in landlord-friendly USA. Mortgages are infinite, basically. Rights are all in your favor. The US economy is creating some significant distance between the two economies. They go into debt too, but they're investing in creating historic amounts of high-paying manufacturing jobs. So just simply, if you're going to bet on a stock, say Canada was a stock and US was a stock, which would you choose? Right. And to me, it's pretty obvious.
Yeah, I think if you look at government policies coming in across the board and like you look at the federal budget and everything here is geared towards the tenant protection, and it's very much done so from a we do this to get votes perspective. It doesn't help the investor at all. And you look at the US and they are very protective of their investor class, and it's just a night and day comparison. And I know
Mhm.
when you do look at those comparisons of where am I going to put my money, it's like, you know what, long term, this is actually a safer play. Sure, there's a bit of uneasiness with it being out of your home country and not having physical presence there per se, but you can do so much to mitigate those risks and protect yourself that way.
And to add to your point, Brandon, like protecting investors, the American government protects foreign investment as well. So I, as a Canadian, are pretty much welcome to buy property in the States, almost anywhere. And then especially more welcome in the landlord friendly places versus foreign investment is largely discouraged and taxed heavily,
Yeah.
if you will, in Canada. So again, it's just completely different environments for investment for business.
So I imagine part of your process for diving into the US and setting up your locations and where you want to dive into, like the nice part is you have 50 states to choose from and not all are treated equal. So I'd imagine the places you're looking in are more favorable to the landlord versus tenants.
Yes, absolutely. And that just makes sense. I just read a book called Solve for Happy. It talks about like figure out what makes you happy and what doesn't make you happy. I'm not very happy being an Ontario landlord. So I'm interested in doing some much more passive things in the States going forward. My government hasn't made me feel welcome at all here, all levels, federal, provincial, municipal. At all levels, I don't feel welcome. So why should I stay? And it's not just me too. Like I have a lot of clients that I'm helping in the States. My clients have bought more property in the States than I have so far. But yeah, to your point, landlord friendliness. I studied economics in school as well, and I've been studying economics ever since. So I largely lead with where is investment going,
Right.
right? And investment in the States also follows where is it business friendly. Where it is business friendly is generally landlord friendly as well.
Is there a few spots that are like high on your radar right now for anyone who's like just curiosity level exploring that?
The two big stories of the States in terms of economics is they're investing heavily in microchip manufacturing and electric vehicle. Anything around electric vehicles and green energy in general, but largely electric vehicles. Folks can just simply Google every battery or car manufacturer. Seriously, that's how I did it because the news is all cluttered with like politics and war and stuff that doesn't help me as an economist research, right? So I literally that's how I actually had to look up all my news was, General Motors Investment USA, LG Battery Investment USA. I actually have a spreadsheet on it. I read all these articles, but then there's just too much to track. I honestly have about 4 pages of historic levels of investment, minimum $1 billion investment, or 1,000 net new manufacturing jobs in the States. There's honestly just tons. But anyone who follows USA investing, the same states keep coming up: Tennessee, Georgia, Texas, Alabama. The property I've tied up is in Missouri, specifically Kansas City, because Kansas City has quite a bit going on for it.
Nice.
Yeah.
That's awesome. You're in safe space when it comes to giant spreadsheets. We are spreadsheet wizards over here. So
Hey, if you want me to share it, I'm happy to share it.
Yeah, we would love that.
Actually, everyone asks for it because it's a lot of work to put it together. But again, it's just weird because every time I find something, so much investment in the States. For example, I knew about Panasonic's investment in Nevada because Panasonic is partners with Tesla to manufacture batteries. They're spending some of about $3.6 billion to upgrade that plant. What I didn't know is that Panasonic's building their own plant just outside Kansas City, Missouri. So $4 billion
Oh,
investment expected to create 4,000 net new high-paying manufacturing jobs.
huge.
Yeah, so it's
That's
absolutely
huge.
huge. And these
Yeah.
investments absolutely eclipse anything going on in Canada. So again, that goes
Yeah.
back to my point. And then not just automotive, get away from automotive, like the microchips. Start from a high level. This is how I always think is what is the biggest thing in the world in terms of jobs, business, whatever. And I think most people can agree it's AI. And so
Mhm.
OpenAI controls ChatGPT. So OpenAI is over 50% owned by Microsoft. So then I just keep asking questions. Who makes Microsoft's microchips? It's NVIDIA, and they're actually trying to diversify to AMD as well. So then my next Google is, where are NVIDIA and AMD chips made? Who makes them? TSMC. TSMC, the T stands for Taiwan Semiconductor Manufacturing Company, the world's largest outsourced manufacturer of microchips, right? And where are they investing? They're building 3 fabrication plants right now in Phoenix, Arizona. $65 billion investment. It'll create something around 6,000 jobs. So I believe this ranks among the largest foreign manufacturing investment in US history.
Yeah, so why not follow that? I mean, I love that approach because most investors will start with maybe Googling what's the highest cash flow state or what's the highest cash flow city. And I think that's like the wrong place to start. So are you going for cash flow heavy or are you more so just ensuring that you have maybe cash flow neutral, cover your nut and have the appreciation happen over time? Like what's your play there?
What I find between both my clients and I, because we pretty much all have portfolios in Canada, like I consider someone who is an existing homeowner. Say they own a house in the GTA, it's $1 million, right? You already have $1 million of real estate here. And then they ask them how's your cash flow situation? They always tell me not good. That doesn't
Yeah.
matter how many properties they own, pretty much not good. So what I'm finding is most of my clientele and myself included, our portfolios in Canada, specifically the Golden Horseshoe of Ontario, we're all poised quite well for more appreciation. So pretty much all of us are looking for more cash flow. So
Gotcha.
we're looking
Yeah.
for those more affordable markets. So as wonderful as Phoenix is in terms of appreciation, expected appreciation, just from population growth, right? Everyone from the West Coast, North America, basically, that's like their most popular place to go for winter vacation, right? For us on the East, we're all going to Florida, right? So it's less as a popular destination for East Coast Canadians. But my point though is that Phoenix is already pretty pricey. It's hard to get a house for under 300 grand
Yeah.
versus markets like Memphis, Tennessee, where I think over half my clients are buying, part outside Atlanta, Georgia, and my property in Kansas City, Missouri. Like those are more affordable markets. You can get better yields. You can get higher cap rates as well. Most Canadians are all looking for cash flow because they're all getting squeezed here with the poor affordability. And most investors don't even know what cap rate means because they can't get that much cash
It's
flow.
just not
They can't get that
applicable
much
here.
operating income.
So for your clients that you're guiding to buying in the States, in terms of their setup, are you setting up like a corp there? Or some of them putting it in their personal names? How is that structured typically?
What I'm promoting with Share is more of a passive investment. So we're pretty much all structured the same. For those who have done more research on this, they've heard of the GPLP, General Partner Limited Partner structure. So pretty much all of us have that sort of structure, which is intended for those who are passive Canadian investors. Luckily, my wife is a Canadian accountant. My friend at Share, Carmen, is also a CPA on both sides of the border. And also we've consulted, of course, lenders right? Because like you guys are lenders, you get it, right? You have to appease CRA, the lenders, liability protection, and also privacy is a big thing in the States. So there's more optimal choices for privacy. And I like to be private. One of my goals going forward is that a property manager or tenant never calls me again. And I can
That's a
achieve
dream.
that. Right?
Yeah.
Yeah. Again, I've been a landlord for 20 years. I put in my dues and I kind of know what I want now going forward.
You've been investing for how long here in Canada? Is like 15 years now?
Since 2005. Yeah, it's
Oh,
20
wow.
Yeah.
almost 20 years. Yeah.
You've definitely seen it all, the highs and lows, and obviously you've probably made out pretty well over the years, but you're kind of seeing the writing on the wall. And I think a lot of us are. There's some solutions to help with that. Like I'll drop their name, Single Key. I don't know if you've heard of
Mhm.
Single Key, but
I use single key. Yeah.
so
Mhm.
like that mitigates some of the risk, obviously. For listeners that don't know Single Key, they cover you up to a year for if your tenant stops paying you, they'll kick in if you have their rent insurance. And you obviously have a fee for that every month. And it helps, but you still run the risk of landlord tenant board past a year or so.
And there's a cost to it. It's about half a
Yeah,
month rent every year.
for sure. For sure. Yeah. But it helps. So going back to your structure, the LP is most favorable for Canadians from a tax perspective, right? Like obviously everyone's situation is different, but to kind of put like more of a blanket statement, LP is generally the route to go.
For passive Canadians. And,
Right.
I'm not an accountant. I'm not your listener's accountant. They should always get their own advice. The comment I want to make though is most people who mess this up and end up paying double taxation, generally they're getting advice from an American lawyer, accountant, guru, right? And it's just reality is that they're not used to dealing with Canadians. So you
Mhm.
really do need to speak to a Canadian accountant who's familiar with working with Americans. But yeah, so that's the structure we have. We have GPLP structure. And again, if they say that to their accountant or lawyer, they should understand that.
If your accountant or lawyer doesn't understand that, it's probably a good idea to find a different accountant or lawyer to work with if this is your strategy. There's a lot of nuance and different things when it comes to investing. And we found that clients don't always have the best team in the background to facilitate their growth and their setup and what they're actually looking
Yeah.
to accomplish. So it's important to ask some of these questions. Sometimes you have like a relationship with someone who, when you're just a straight T4 employee, they have a basic level and they're able to file your taxes. But as you add complexity, you want to add skills in your back end team as well, because that's really
Mhm.
going to save you money and pain and heartache long term.
Mhm. Absolutely. To mention some other things about the States, the advantages is for anyone who knows commercial real estate, like retail or industrial, in Canada, I mean, that's my analogy for how residential landlording is in the States. For example, I literally had this. My tenant had her boyfriend move in a year ago and didn't tell me. She only told me because her new landlord was doing a reference check. So she had to let me know that her boyfriend had lived there for a year. Oh,
Oh,
thanks for
by the
letting
way,
me
he's been
know.
here for a year.
Right. Yeah, they've already been living here a year, but it's just so you know. But yeah, I have no rights around that. Versus if this was in landlord friendly USA, I can charge that new person
Right.
rent. Not only that new person, any additional people they have move in with them long term, and also pets. Right. Each dog, and depending on the size as well, I would charge them rent as well. If they choose not to pay me rent, I can fine them.
For my property, I think we were charging $30 per dog, and I think they have 2 dogs. So, like, right there, $60 extra. It helps. It can mitigate some of the costs.
Yeah.
So if you find out that, say, they had a dog and another person, can you do that charge retroactively or is it just going forward?
Again, it's depending on the lease, but that's how I would word my leases.
Okay. No, that's cool.
Right.
That's really cool. That would not fly here at all. That's
Would not. Oh, you can say no to smoking too, right?
okay.
No different than a commercial property and retail industrial, you can have terms that are in your favor.
It's very clear from like a cost of investment, cash flow, rights, everything, why people
Yeah,
should
no
do
rent
it.
control.
Yeah. Can you highlight a few reasons why someone wouldn't do it? Like what would be the avatar of someone who wouldn't be a fit for this type of investment?
I was literally talking to my wife about it this morning. I have a business now in the States for investing. I have to file taxes in the States as well.
Okay.
So that's why I tell all my clients and anyone who comes into the door and wants to talk about this, like I always say, you have to be planning to buy at least 3 properties to pay for the accounting. But then I'll also say, what's different about investing in the States is because the way that we do it, it'll be smooth. So you can bring on partners very easily and passively, family members, whatnot. I have a group of tech bro clients. They each work for one of the FANG companies. So they all make lots of money and they're like childhood friends. So why not? Why not 4 individuals with lots of money just divvy up the shares equally, and then you only pay for one accounting fee? right?
Yeah, it's a great idea.
Yeah.
You need to do scale, but that's no really different than here as well. You need to do enough scale, and really you need to do enough cash flow to afford for professional services, right? You have to pay an accountant here to do your filing as well. But yeah, no different in the States. You need to make enough cash flow to make everything worthwhile. Ideally not pay as much out of pocket. But I'll say it's a lot easier in the States to cash flow,
Yeah.
right? This little $158,000 house I'm buying, it'll be a 5.9 cap. And so for the listener who doesn't understand what cap rate is, please look it up. Right.
Yeah.
Investopedia, there's people that write about it on YouTube, right? I'm sure you guys have talked about it and you will gladly talk to your client about what the cap rate is, but every sophisticated investor and professional real estate investor knows what a capitalization rate is.
Yeah. So you just got this one under wraps and it hasn't closed yet, right? It's in the
No, I'm
process.
still waiting for the home inspection and my quote. I got ballparked the renovation, so I'm still waiting for the quote and whatnot. So it's still a conditional deal. It is from a wholesaler and it's done off market. Share brought me the deal. So
Okay.
they're
So
really
share
one
brought
stop
it.
shopping it for me.
That was my follow-up question because I've gone down the route of like getting on wholesalers lists is a whole project that you have to scan Facebook groups, you have to get on their email list, you have to
Yeah.
sort through the emails. Like it's a
Yeah.
whole process and I've gone down that route and that's why
Yeah.
I stopped at one property because I'm busy in my mortgage business and I'm
Yeah.
like I can't take on this whole other business. So why don't we chat a bit about like what Share does and how they brought to you this deal? I'd love to kind of go through that and maybe just run through the numbers on this property.
Sure. It is an American company. It just happens that the four founders are Canadian. The CFO, for example, she's almost a grandma. She's been a CPA for I don't know how long, over 30 years, practicing tax accountant. She's from Canada, but she lives in Tampa Bay. She has 70 investment properties herself. And again, she's a CPA on both sides of the border. And then she said something to me I've never heard an investor say. She said the last few properties she bought with the cash flow from her portfolio.
Wow.
You guys are mortgage professionals. Has
Yeah,
Like,
anyone
bought it outright?
this the down payments?
Still, that's
that's
Still.
crazy.
amazing. Yeah.
Like, everyone does refis or HELOCs, right?
Yeah,
Yeah.
yeah.
So, like, to me, my natural next question is I need to learn more.
Yeah.
She's been investing since 2008, and again, she's a practicing accountant. She does people's tax returns. So she's bringing clients to the States since, like, the early 2010s, right? So that gave me a lot of comfort in knowing how to do this. And then what her and her client Andrew realized, Andrew's now the CEO of Share, just how the term I like to use is analog. Like real estate investing is largely analog. It's a lot better than it used to be. I've been a realtor since 2010. So I remember the old days of faxing offers and whatnot. There's nothing like DocuSign these days, right? It's not nearly as organized now today as it is available via Share. Like, for example, for most Canadians, one of their biggest hurdles is legal structure and then creating the legal structures, right? I've heard quotes from accountants and lawyers between $2,500 to $10,000,
Wow.
right? So to create my LLC and my LP, and then my wife and I will own them personally, just because of the way the new capital gains taxes the way they are. So then we can report them as personal capital gains. But I think I paid $1,000 between the two of them.
Really?
Yeah. And then Share guided me through that. And they just sent me basically a DocuSign to get my EIN, my employment identification number,
Yeah.
which is my unique IRS number, so I can pay taxes. But they're just hand holding me through this whole thing. They're trying to prove funds. So they send me the deals. The first one I bid on, I didn't know anything about Kansas City, but then just, between ChatGPT and Gemini, I was driving from Muskoka. So I had a lengthy conversation with ChatGPT to tell me about Kansas City, Missouri. Doing research these days is easier than ever. Like, for example, one of the things that may give me a lot of comfort about Kansas City, Missouri is the Ford F-150 is manufactured there, right? The US's number one manufactured truck for the last
That ain't going
46 years.
anywhere.
Yeah, it ain't going anywhere.
Yeah.
7,500 jobs, diversified economy. And that's actually how I found out about Panasonic being there. Even though I've done a ton of research, that one slipped through my fingers. I had no idea about the Panasonic plant. And now I have like, holy cow, now I have upside. I have a past and now I have a future reason to invest. So again, Share family the deal. And the interesting thing about wholesalers in the States as well is the good ones, how they scale up is starting to wholesale for institutional investors. So that's actually the wholesale that we're doing. Because, just to throw some numbers around, wholesalers in the States, like an individual might do like 30, 60 deals. As soon as they start selling to institutional investors, they can easily do 100.
Right.
Because this thing, you only have like maybe like 3 customers. So you do away with all the previous customers that you're used to dealing with. Right, Tom? Like, think about how many people were on that email list that you were on,
Yeah, exactly. They probably have
right?
thousands. Yeah.
And then how many questions those people ask, and then how many tire kickers are among them,
Yeah.
right? Those folks who have no money, who just want to tie it up, and then they go try and find the money.
Yeah, and the reverse is true too. Like there's so many wholesale, well, maybe not as many as we had during COVID, but back when I bought my property, there were so many wholesalers. And the flip side to that is there's so many that are new and have no idea what they're doing.
Mhm,
And I imagine like Share, when they partner up with these wholesalers, they're doing the screening process. They're picking out who the right wholesalers are to partner
mhm,
up with too.
mhm,
So I can see that being a benefit.
mhm. Well, the wholesaler that I'm working with that provided us the deal in this one is actually the property manager's wholesaler.
Okay. So yeah, they're putting their money where their mouth is.
Yeah, the challenges I find with Canadians is they're just not familiar with how much bigger everything is in the States. Like the property manager I'll be using, the ones our clients are using, they usually have something like 3,000 houses under management in that city.
Yeah.
Right? Which is basically unheard of in Canada. So when you have scale, it's like being a Costco member. I'm a Costco member. I live I'm there once a week. But like, my car rental is cheaper. Generally, my groceries are cheaper. 8 out of 10 times I'm getting a better deal. Right. And no different by going through Share. Them being an institutional investor, I get access to everyone that they have access to. Their property managers, their wholesalers. The property managers will have lawyers in house. They'll have handy people in house. So all those costs come down as well. Tenant doesn't pay me rent, they can just make an internal phone call, start the paperwork to get that person, encourage them to pay or leave, right? So all those costs come down as by being a customer Share, which is what I'm planning on doing, what my clients are doing in the States. So they're coordinating right now my home inspection and this is the property manager who's going to be doing my renovation. Because again, it's because they have so much scale. They want this business just so they can collect their property management fees. And the way the contracts are negotiated as well, because again, Share has clout. I don't pay property management fees or asset management fees unless there's rent coming in. So
Oh, cool.
everyone's incentives are in line with my financial goals. These things are not easy to get in Canada, right?
Yeah, and then once that fee structure kicks in, how is Share set up that way? Is it like a percentage of the rent? How does it work that way?
So all asset managers, more commonly known as REITs, they all take fees. Like I have friends that in this business as well. One of my friends takes 30% equity as well. I like doing diligence. I just feel like that's the right thing to do. I was researching a publicly traded one and they charge fees and they charge performance fees versus what I like about Share. Again, I'm cheap though. So I still want an optimized high performing investment. So how Share makes money is they charge a 3% acquisition fee based on the investment value. So investment value would be like the purchase price of the home plus the immediate renovation. So 3% of that. And then their ongoing asset management fee. What I'm seeing my clients pay is they're paying between 0.5% to 1% of that same number of the investment value. And that's paid over the year each month. But again, that comes out of your rent.
Okay.
And so when I say cap rate, that's still after all fees.
Right.
Yeah,
After
that's
property
great.
management, after leasing fees, after repairs and maintenance, after asset shares fee, after everything. So again, like I say to Canadians all the time, find me a 5, 6, 7 cap in Canada where I have all the rights. And again, the property I'm buying is a 3-bedroom detached, 1,200 square foot for 158,000 American,
Yeah,
Yeah.
right?
Single family dwelling. You're just not finding that.
and hands off too, right? That's
Hands off.
Yeah.
Yeah.
that's a big
And
win.
then to add to the hands off part, all my financials and documentation is all managed on my client portal within Share's website.
Yeah, that's cool.
Yeah, it's easy. Like all my bookkeeping is done for me. No different than discount stockbroker account. When it comes tax time, you get your tax documentation. Just download the PDF or CSV file and send it to your accountant, right? So all the
Mhm.
bookkeeping for the properties is done already.
Yeah, so just to be clear, Share doesn't own any of the equity in the property. They
No,
charge the upfront fee and the ongoing management.
that's it. And
Love
to
it.
me, that's cheap because nobody does
Yeah.
that,
Yeah,
right?
exactly. Yeah, I actually assumed there was some sort of ownership part of that. So, and I'm a guy that loves to leverage. And I think initial thought for some people is like, okay, well, like 3%, I don't want to pay that fee. But the reverse to that is that you're going to spin your wheels trying to find these deals. You're going to spend more time. Time to me is more valuable than a fee that you pay up front. And you have that ongoing management in one place. I know I'm selling this hard, but honestly, I love the idea. And I like the fact that you can just be more hands off and trust these people that have already put in the reps and can leverage other people that they've built up this team and you don't have to go and find and do that.
Team is incredibly important. The chief investment officer of Share is ex Starlight Capital. So the largest REIT, the largest apartment building owner in Canada, 53,000 units. And he was executive director of investments for the US portfolio. So he was actively hands on a portfolio of like 20,000 units that passed through his desk. So he knows
Yeah.
more about US investing than anyone I know personally. Right? That's $7 billion worth of transactions of US income properties.
Yeah.
But I'll at least stack my team up against anybody else.
Exactly. We always talk about like building our team kind of like in the idea of a hockey team. So every player you can add to your existing team. Someone plays better defense, so you have your accountant, your legal there. But then when it comes to offense, like, you want to have someone finding the deals, you want to have someone finding great rates and products and everything that way. And you can stack your team this way, and anything you can do to buy back your time is a big win. So a couple percentages here and there, you will save money, you'll save headaches for sure, but long term you free up all that time, which, go earn more money and whatever else you do, and pour that back into investing. That's how you're going to scale long term.
Yeah, going back to the ARV. So when it's determined the fee on the total after repair value, who's determining that? Are you doing your own calculations and then sending that into them and they review and might make some corrections to that? Or is it them that runs the numbers?
So for investment value, we're just doing purely book value, what you bought it for, what the price of the renovation was.
Oh, okay.
Yeah,
So they do it after the reno is done.
it's just book value, right?
Yeah.
ARVs up in the market. But what I'm hearing is that lending is still pretty tight in the States, so ARVs aren't coming in that high. But for my project, I'm expecting like a $10,000 uplift in equity. If it's there, great. If it's not, it's okay. My numbers still work great.
Yeah.
Yeah.
Yeah, because I think the LTV is still 65% for Canadians, right? Unless they've gone up to 70, but from when I was doing it, 65 was like the highest we were getting.
But folks want their minds blown. How many lenders are there for investors in Canada?
I think we sent 52 we had on our portfolio of like options last year, and
Oh,
that's
fantastic.
just broker channel. So add some
Fantastic.
big ones
Yeah.
who aren't in there. Yeah.
Yeah, not including privates too, like
Privates mixed.
Not
Yeah.
including privates. But I think the number is there's over 1,000 lenders ready to lend non-residents in the
yeah,
state. It's just a different market. Even though these are residential properties, it's all commercial mortgages on residential
right.
property.
Yeah, exactly.
Infinitely scalable portfolio as long as you have the down payment and can find deals that cash flow.
Yeah. When it comes to that mortgage financing, is Share helping you with like partner lenders as well? Or are you on your own to find that lender relationship?
They're open to folks bringing their own mortgage. Again, Share's a tech company, and how I explain to clients is like it's like what you guys do, full service, or you can go like Amazon levels of service where you may never speak to a human being.
Yeah.
Yeah.
And so for most of my clients, they go the route of service, right?
Yeah.
Because with my clientele, almost all of them are using money from existing capital in their properties here in Canada to invest in the States. So it makes sense that they have a more full service, one stop shop solution, right?
Yeah, instead of trying to nickel and dime and not have someone that specializes in Canadians investing in the US because it's completely different than a US person investing in the US. So
Mhm.
why don't we like touch a bit on that? What are your plans here in Canada? Sounds like you're done. You're not looking for any more deals going forward. You're selling off maybe a portion of your portfolio here. Like maybe
Mhm.
talk a bit about that.
So I've been talking sell for quite a while, even on my show. It was kind that some people from my audience wrote in and said, "Thank you. I did sell when you said so," and other people were saying not to. I'm grateful for being dumb luck sometimes. I've sold 5 of my own properties in the last 12 months. I made the decision to accelerate our selling, I think back in November, December of last year. I just didn't like the way things were going here. And also just with rates being high, inflation just being brutal on our properties. So I've sold 4 this year so far. That might be all I sell this year to raise capital, pay off debts. I can be mortgage free now, which is amazing. Pay off our car loan. So yeah, thanks to real estate. My advice to my clients is, again, I'm a realtor, so I make money selling real estate. But I can't in good conscience recommend to someone to buy an income property for
Yeah.
purely investment purposes in Ontario. I don't know BC and Quebec that well, but I'm guessing it's probably similar.
I think BC is worse than Ontario, actually. I don't know Quebec. We don't touch that.
Alberta's better, but
Alberta's
Alberta's
better.
better.
yeah.
Alberta's better, but then I'll just put back, affordability is better in the States, and also the SCR is available in the States. It's not in Canada for small residential.
Mhm.
Yeah.
So my plan is to continue telling people, just use what Share offers. It's boring. Use that as a baseline against anything else you're investing against. Because again, like I can walk into 5, 6, 7 cap rates into single family home in the States. What do I have to do with 5, 6, 7 cap rate in Canada?
You go multi.
You got to go student rental with like 4 people in a bedroom.
Right.
Maybe.
Yeah. And then you guys are lenders. How much do you like those deals?
It doesn't really fly. And you're getting alternative financing, so
Let's just say we don't take them.
yeah.
I was down that road. One of my properties I sold was a student rental. I won't say how many people are in it, but I was getting really good rent. I was with a B lender. My plan was selling it, so we had an open mortgage, so I was paying 10% on that mortgage. But even with the B, I think I would be paying over 8, right?
Yeah. Yeah, like,
Yeah, yeah,
you could do a student rental right now for, like, 7 and a quarter,
yeah.
1% lender's fee.
Which is,
They're
like, comparable to the US rates right now for Canadians, like,
Yeah.
I mean, it's been a while for me, but I think, like, usually they're 3% more than Canadian rates, obviously depends, but I'm pretty sure it was around there when I purchased.
Mhm. Unfortunately,
Yeah.
mine was also in Hamilton, so the city's chasing me for licensing. No
Yeah,
longer though, because it's
Oh, yeah,
solved
there
the
you go.
problem now.
Yeah,
you're
nice.
free.
And that's the thing. I feel so much freer. I'm so much happier. Obviously, I've made some money, but yeah, peace of mind. It's worth a lot. And stress, I think, will be considered the new smoking. There's a lot of people that they're getting sick and they don't really know why, because stress hasn't been studied enough. Smoking's been well studied. I think everyone knows if you can remove some stress from your life, why wouldn't you? Right?
Yeah,
Yeah. I'm kind of in that zone right now too. I just wanna declutter, focus on 1 to 2 things in my life, and just go
Yeah.
deep on it. Brandon's laughing because I say this, like, every day. I've got properties here that I wanna start offloading potentially. Just having the peace of mind knowing that they're all gone out of my life would just I feel like it would free up my mind.
Hmm. Hmm.
So I agree with that.
My friend in the States, Andrew, he's the CEO of Share. He's not even in the States. He used to live in California, but now he's back in Brampton. He owns 20 houses he's never seen before. Never seen them before. All in the States because the management is just so much better in the States. And he cash flows $10,000 US a month
From
wow.
from
20 properties, eh?
20
That's
properties. It took him
awesome.
10 years to accumulate all of them, but still,
Yeah,
where do you find this in Canada?
yeah.
Right? I'm just looking for opportunity
Yeah,
That's great.
and less headache. You know, the funny thing is, like, a lot of people know this message is out there. Almost no one's argued with me. I've had some very brief conversations, folks say, oh, there's no appreciation in the States. And I'm like, that's because you invest in Cleveland.
Mhm. I was
Right.
just gonna say Ohio, yeah, because
Yeah.
a high cash flow, but you're not gonna get that appreciation. Or where I am, Indy.
Right.
Actually, I've seen a bit with Indy, but same kind of boat.
I have the chart for the area I'm investing in, Kansas City. The prices have doubled in the last 10 years.
Yeah.
You can't tell me there's no appreciation, right? You can't make blanket statements like that. You can't tell me places like Phoenix or Austin, Texas didn't appreciate like
Oh, yeah.
crazy the last 10 years.
Florida.
Florida, yeah. But then just the caveat that insurance is a hot, big risk in Florida.
Yeah.
Yeah.
Yeah, especially along the coastline too.
So for Share, for example, they're even looking at divesting some of their Florida portfolio, even though they're up near Tampa. You know, just think if you're an insurance company, you need to recoup your losses. So you just increase everyone's insurance. Doesn't matter where they're located.
Yeah, and does Share focus only in specific states? Like, how many states do they deal in?
Pretty much the entire country, anywhere it makes sense for investing. Wherever there's institutional grade property management is generally where it's good to invest.
Yeah.
yeah,
So I know the Carolinas, again, I mentioned like Alabama, Tennessee, Ohio. They're pretty much everywhere where it makes sense for investing. That's how capital works. It'll flow to where it's welcome and treated well.
yep,
Right. So not California, not New York City.
Yeah, exactly. Yeah. Avoid those.
Just to close it off, because in case the listener doesn't know, those are generally tenant friendly areas.
Yeah. It's like in Ontario. Maybe not as
yeah.
bad, but like Ontario.
Ontario Light.
Yeah.
Beautiful. Well, Erwin, thank you for coming on today and shining a light on this. I know, like, Tom and I joke because we're always like, we got to simplify with running our brokerage and our book of business and the properties we already have. We're always like, we got to simplify our life. But then we have someone like you on the podcast. And I know, like, both of our wheels are spinning, thinking about different opportunities in investing in the States. And I love that you shared a version of investing here that's very hands off and stress free. And I can tell from your mindset and outlook right now that you're very happy and the direction is really great. And for a lot of people who are stressed or they're not headed in that same direction, this it's really refreshing to see that real estate investing, just do a little hop below the border, can still be a great avenue to build your wealth with and take that layer of stress off. So thank you for coming on today and shining a light on that.
Thank you for having me. I'm only a real estate investor because I'm so stressed out about all the problems we have coming down the future. Like you both have kids, right?
Yeah.
What parent doesn't stress about how their kids are going to afford to live?
Oh yeah,
Exactly.
it's
Right.
you top up the RESP, you add a rental property here and there, and you're like, all right. Well, I was joking with my daughter the other day. I'm like, yeah, you'll need like $2 million for your first starter home. Better start saving.
Better top up the RESP.
Yeah,
The cost of everything rising, you really have no choice but to be an investor. That's my opinion. That's my experience. And it's worked out well. I'll continue buying properties because, again, Governments will continue to print money. Inflation will constantly be a thing. Housing inflation in the States for the last 53 years has been 5.5% on average. That's a lot of inflation. Golden Horseshoe's been around 7%, right, for over the last 20 years. So you really have no choice but to grab some of it or else it gets away, right? So that was my philosophy when I bought my kids' houses when they were born, because this market might get away from my kids. I since
Yeah.
sold those houses now, so I owe them houses in the States.
Yeah, I think that's something people don't realize is that the wealth divide is growing bigger and bigger with each day. And if you don't get on the property ladder, be it here or in the States, you're not going to be able to earn at a pace fast enough to catch it. Maybe one or two people will be lucky to grab a break like Nvidia in the stock market and make their money that way. But for the majority of people, they're squirreling away their money in high interest savings accounts that they're just effectively losing wealth year after year. And there's no way to ever catch the wave. And I know I felt like this when I finished university. My brother said, "Oh, you should go buy a place in Hamilton," and we were living in Burlington at the time. And I was like, "God, I just don't have the money." And he's like, "Just partner with a few buddies and do it. Like, get the place." And I didn't do it. I didn't listen to him. And then, like 3 years later, I was looking for a place in Hamilton. The property prices had gone way up, and I had missed the boat there. And for a long time, I couldn't get anything. And fortunately, I found the mortgage industry where we made money quite quickly, and it allowed me to start getting properties. But without that change in opportunity in industry, I would have been probably sitting on the sidelines right now too.
And for anyone listening, the next wave is coming.
Yeah.
The rate cut period is coming, is upon us.
Yeah. Yeah,
That'll
exactly.
just be stimulus for prices to go up. And then for the States, a lot of those investments hit in like 2021. So a lot of these factories are opening this fall. And then
Okay.
so you want a real estate event, like you guys know, who's the most motivated real estate buyer? The guy that's got to move, right? So, when doors open for high paying manufacturing jobs, you better believe people are moving either to buy or to
Sure.
rent. So, me being someone who likes to optimize their investments, I want to be there before that happens and before the rate cut happens in the States. So,
Yeah.
Yeah, that too.
Yeah. Two events there for sure that will time quite nicely for you.
yeah, hopefully.
All right, Erwin, it's been a pleasure. Thank you for hopping on the podcast and talking all the things about US investing. And if you have anywhere people can get a hold of you, where would that be?
They can actually go to my website, iwin.sharesfr.com, or they can just Google me. I'm very easy to find. But if for folks who want to browse what US properties look like in terms of numbers, they can simply go to iwin.sharesfr.com and they'll actually see my deal on the website as well. They just need to create an account, name and email address. They can create a free account. And the property that's on from Kansas City is the one that I have tied up right now.
Beautiful.
Beautiful.
Awesome. Thanks, Erwin.
All right. Thank you guys.